Hey, what's up winners? Nam here. So in today's video, I'm gonna go over 5 high growth stocks for the month of September. Count them. 1, 2, 3, 4, 5. I invest into stocks for weeks to months at a time, so if you're a lazy investor just like myself, where you don't want to be checking your stocks on a daily basis, this is the perfect video for you. If this is your first time here and you want to learn how to invest and improve your personal finances, start now by subscribing and clicking the bell so you don't miss out on any future videos. I thoroughly research each one of these companies, so make sure you stick to the very end to get a full breakdown of each stock. As a full disclaimer, I do hold some positions in some of these companies, so always do your own research before investing. But since all of these companies have market shares in the hundreds of millions to billions, none of these companies are going to be pump and dumps. So now let me stop wasting your time and go right into the companies. So let's kick things off with stock number 1. Virtu Financial, ticker symbol VIRT. Virtu is a holding company based out of New York, meaning that this is a market maker that buys and sells all different types of securities. It provides financial services, trading products, and market making services. So at the making of this video, Virtu is trading around $26 and the 52-week range is around $15 to $26. The stock currently has an average daily volume of 1.4 million shares and it has a market cap of 5 million. And as for the PE ratio, it's sitting around 8, which is not too bad. One thing a lot of people are surprised to see with this company is that it does have a dividend yield of 3.73%, which is pretty high compared to most companies. So now let's dig a little bit deeper into the financials. So for me, I like to look at the trends. There's a little chart on Yahoo Finance, which makes it very helpful to look at a quick glance. So annually, this company has been growing year after year, but in 2019, there have been a slight dip, and the earnings are fairly inconsistent. But now let's take a closer look at the quarterlies. The revenue had a big jump in the beginning of quarter 1 and had a slight dip in quarter 2. I'm more of a technical investor and I really like how the chart looks, so let's take a look at them. So let's take a look at the monthly charts first. So on the monthly charts, I have the 10, 20, and 40 EMAs. I also have a MACD down here and also an RSI. So on the monthly charts, everything looks bullish. So recently, all the lines converge bullish. Price action is moving up. There's this big bullish pin bar right here. For the MACD, bullish signal. Also the RSI as well is pointing upwards. All signs are pointing bullish. So now let's take a look at the weekly charts. So on the weekly charts, this is the main reason why I want to buy the stock, because all signals are bullish. You kind of see a resistance right around here, around $26 or so, but it's making higher highs and lower lows. The MACD is a little stagnant. RSI is pointing upwards, really not that much movement there, but all signs still look bullish to me. So I would still enter right around here, around $26. So now let's move on to stock number 2, Tencent Music. Ticker symbol TME. So in a nutshell, Tencent Music Entertainment Group is a company that develops music streaming services for the Chinese market. If you guys are not familiar with Tencent, this is one of the largest companies inside of China. So this is basically a Chinese version of Spotify, because it really is. Tencent joined forces with Spotify to have a streaming service for the Chinese market. With all of their apps combined, they have more than 700 million active users and 120 million paying subscribers. As of 2016, this company held an estimated 56% of the market share for music streaming services in China. So they're big. Now let's move on to the numbers. So at the making of this video, TME is trading at around $16 per share. The 52-week range is around $9 to $18 with an average trading volume of around 11 million shares. The market cap is 26 billion, the PE ratio is 49.6, which is relatively high, but for most stock nowadays, they are overpriced. And since I hold stocks for weeks to months, it's really not that big of a deal for me. And unfortunately, this company does not pay out any dividends. So now let's dig a little bit deeper onto its financials. So the income reports for this company are very strong. Since 2016 to 2019, it has been increasing revenue year after year, and its earning has been positive as well year after year. So in recent news, Ray Dalio, which is one of the founders of the biggest hedge funds, Bridgewater, recently bought into this company. He bought a total of 620,000 shares in quarter 2, and he has a total position valued at around $9 million. We all know that streaming services are what we now use the most to listen to music. I found myself using streaming services way more than I do the radio or any other type of media services. With this company having the majority of the market share for music streaming in China, I can really see this company doing really well in the future. So now let's move on to the chart. So let's take a look at the monthly charts. Ever since the IPO back in 2018 of December, it's been popping off ever since then, but it's been bearish almost ever since March of 2019. But recently of April 2020, it's been having bullish momentum right here. you kind of see like this big old bullish pendant. It's red right now, but that's a bullish signal. There's no MACD or RSI, but now let's take a look at the weekly charts. So I really like this stock just due to the weekly charts. There's a 10, 20, 40 EMA, all bullish. It recently just bounced off the 20 EMA and it recently just passed the 10 EMA. MACD is still bullish. RSI is not overbought or oversold. So from an entry standpoint, I would enter right around here at around $16. This would be a trigger candle right here. So now let's keep it moving with the next company, ACAM Technologies, ticker symbol AKAM. ACAM Technologies is a tech company that provides cybersecurity and cloud services. They are actually one of the largest distributed computing platforms, and they're responsible for serving between 15 to 30% of all web traffic. So the company operates a network of servers all around the world and rents out capacity of these servers to customers who want the website to work faster by distributing content from locations near the user. So now let's move on to the numbers. So at the making of this video, ACAM is trading around $114, and the 52-week range for the stock is between 75 to 116, with an average daily volume of 1.7 million shares. The total market cap for this company is $18.5 billion, and it has a PE ratio at around 34.5. And unfortunately, this company does not pay out any dividends. So now let's take a closer look at its financials. As for the annual revenue, it has been growing year after year. This is what you want to see. And as for its earnings, it has been steadily growing ever since 2017. Now let's take a look at its quarterlies. The quarterly revenue has still been in an uptrend ever since the fourth quarter of 2019, and earnings has increased as well. Another reason why I like this company is that a large percentage of the company is owned by insiders, meaning that $18 billion worth of the company's shares are owned internally. So this gives you the peace of mind that these people have the skin in the game as well, and they're not just playing with shareholders' money. So now let's move on to the chart. So starting off with the monthly charts first, everything has been bullish ever since 2018, late 2017, and it has been taken off. MACD bullish, RSI bullish, overbought on the monthly charts though. But now let's take a look at the weekly charts. On the weekly charts, it still looks beautiful. 10, 20, 40 EMA, bullish signals, higher highs, lower lows. MACD bullish, RSI not overbought. So this will be a good entry point right around here at around 114. So let's keep it moving with company number 4, Cloudera, ticker symbol CLDR. So Cloudera is a US-based software company that provides data engineering, data warehousing, machine learning, and analytics in the cloud. So this company has been around since 2008 and was founded by 3 engineers that worked at Google, Yahoo, Facebook, and they were joined later by a former Oracle executive. So now let's talk about the numbers. Currently, Cloudera is trading around $12 with a 52-week range around $4.76 and $14. There's also an average trading volume of 7.3 million shares, and it has a market cap of $3.6 billion. And unfortunately, this company does not pay out any dividends. So now let's take a closer look at its financials. So from an annual revenue standpoint, it is doing great. Year after year, it is making more and more money. But on the earnings side, it is still losing money. This is not necessarily a bad thing since they are investing more money into the company, so it can earn more money. But now let's take a closer look at the quarterly revenue and earnings. So for the quarterly earnings, it's still in an uptrend, which is great, and for the earnings, it's getting closer to near zero. So this company will probably get out the red pretty soon. For me, cloud services are becoming more and more popular nowadays, just due to the fact that file sizes are becoming larger, quality is becoming higher, so having storage access in the cloud just makes sense for many individuals. So now let's take a look at the chart. So starting off with the monthly charts, there's really not that much information there since this stock hasn't been around for that long, but it's been bearish ever since its inception. But the MACD is starting to look bullish. RSI is starting to look bullish because it's pointing up. But all signs are pointing upwards, higher highs, lower lows. I'm not sure what happened here, but it's still looking good on the monthly charts. So recently on the weekly charts, it recently just turned bullish. Right here, it's just been playing around the 10 EMA, but this is your trigger candle right here. So your entry point would be around 1230, 1240, right around there. MACD is bullish. RSI is still bullish, not overbought or oversold. So this would be a good buy right now. So now let's talk about company number 5, Ceridian, ticker symbol CDAY. Ceridian is an American provider of human resource software and services with employees all over the world, and it has been traded on a New York Stock Exchange ever since 2018. So in recent news, this company announced a pricing of a secondary public offering. So if you are familiar with what an IPO is, this is when a company gets introduced to the public, and from there, this is when it can be traded on an exchange. So when a secondary public offering happens, this is just a second chance for individuals to buy into this company. So now let's talk about the numbers. So at the making of this video, this stock is trading around $77 and has a 52-week range between $38 and $87. And it also has an average trading volume of 1.5 million shares. The company has a market cap of $11 billion and has a PE ratio of 155, which is incredibly high, but since we're traders, I really don't care. Unfortunately, this company does not pay out any dividends. So now let's dig into its financials. The annual financial revenue has been growing year after year, and as for earnings, it has recently been positive since 2019. If we were to take a closer look at the revenue, it has been going down as of recent. But I do suspect that most companies during this year would have some loss in revenue. But as for the earnings, it has been pretty consistent around the fourth quarter of 2019 and throughout the second quarter of 2020. But the real reason why I like this company is due to the chart. So now let's take a look at it. Alright, so let's take a look at the monthly charts first. Ever since its inception, it's been bullish ever since. MACD, not information there. RSI is pointing downwards. You kind of see higher highs right here. The highs are getting lower on the RSI. So that could possibly be a bearish divergence. So just keep an eye on that. But now let's take a look at the weekly charts. So on the weekly charts, it recently just bounced off the 40 EMA, but it's looking to close above the 10 EMA by the end of this week. MACD is starting to converge, RSI is pointing upwards, so this will be a good entry point for me. This is around what, $76, $76.75. So I would consider buying right here and having a stop loss right around the 40 EMA, which is around $67 or so. Alright guys, so that pretty much does it for me. If you guys got some value from this video, make sure you give this video a like. And if you haven't already, make sure you subscribe so you don't miss out on any future videos. And if you want to hang out with me some more, check out my videos over here.